rulemaking?
We actually put out the equity market structure rules, had 105 days of comment from the time we voted it out through March 31st. But I think robust public input helps us greatly, and we take comments on our rules. Our average has been about 70+ days overall. But we also get comments.
And I want to get into the cost-benefit analysis, but my time has expired. With that, I'll recognize the ranking member.
Thank you very much, Mr. Gensler. I'd like to give you time to give your answer to Mr. McHenry and explain to him exactly how you define securities and commodities. Please go right ahead.
So a security versus will has about 30+ terms, and one of those terms is an investment contract. And the Supreme Court has addressed this multiple times over the years, and we as a commission have addressed this in these 100+ actions that the chair mentioned. I think there's 130 or so actions we've taken. And it's basically, if the public is putting their hard-earned funds with some entrepreneurs, promoters, and anticipating a profit, it's a 4-part test. And it's really, it's a broad sweep. Thurgood Marshall said that Congress painted with a broad brush to protect the public. And the SEC is an agency you all set up years ago, is a disclosure-based agency. We're merit neutral, but we're not neutral to full, fair, and truthful disclosure in crypto or elsewhere. And that's really the core. And so is there a group of entrepreneurs in the middle that are working on that project, promoting that project, have a website that the public looks to? Do they have Twitter accounts and handles? Do they upgrade the software, and is the public sort of reading about them, anticipating a profit based? And in fact, is there somebody that's even visiting you and they're hiring lawyers and sending them in to, to talk to us and so forth? Is there something there that the public is anticipating a profit based upon those efforts?
Thank you very much. Chair Gensler, I'd like to ask a few questions about crypto. You've often suggested that we're witnessing mass noncompliance with our securities laws by crypto firms. However, crypto firms often suggest that their coins and activities are different and need a new statutory framework. Do you agree? And does the SEC have the authorities it needs to bring crypto issuers and intermediaries into compliance with the investor protection and market integrity framework built over the past 90 years?
Yes, I do believe that we have the authorities we need and the laws to protect the investors.
Would you say that one more time?
Yes, I do believe that we have the laws and we have the authorities to oversee the crypto intermediaries, the crypto exchange.
Are you exercising that authority now?
Yes, we are.
Would you describe for this committee how you're doing that? I understand that you have engaged with a number of crypto firms. Is that correct?
We have. We talked to the crypto firms, some tokens to how they can register, but also these platforms. I've been around finance for over 40 years in one way or the other. I've never seen a field that's so non-compliant with laws written by Congress and affirmed over and over by the courts. But this is a largely unfortunate for the investing public, non-compliant field.
Thank you very much. I'm going to move on to a question about deregulating capital markets. As you know, this committee cares about increasing access to capital, particularly for small businesses. I, for example, have worked with Chair McHenry to pass legislation on crowdfunding and other innovative ways for startups and small businesses to raise capital. These are targeted approaches to supporting business growth and creating jobs. Some on the committee suggest, however, that deregulation is needed, but I don't see how deregulating capital markets is good for small business, job creation, innovation, or economic growth. Would you please explain whether or not you believe deregulation is needed?
I think that we've benefited in this country by the markets, and that small businesses can raise capital in a well-regulated market that protects against fraud and manipulation. And the reason small business benefits is because it lowers the risk in the markets when you can lower the amount of fraud and manipulation. and you promote good transparency.
Thank you very much. My time is almost up, but I just want you to reiterate whether or not you really have the authority to do what is necessary in dealing with the crypto markets. You said it twice, say it a third time, please.
Well, I think we do. We could use more resources, but I do think we have the authorities.
Have you indicated what resources you need?
We have in congressional testimony to the House Appropriations Committee, and it's included in this testimony as well.
Thank you very much. I yield back the balance of my time.
We'll now recognize the gentleman from Arkansas, Mr. Hill, for 5 minutes, the Vice Chair.
Thank you, Mr. Chairman. And Mr. Gensler, thank you for coming to be with us today. I want to continue to follow up on Chair McHenry's questioning. I'll attempt to be more successful. In November 2021, the President's Working Group on Financial Markets released its report on stablecoins, which recommended that Congress enact legislation to establish a federal prudential framework for stablecoins. You remember that report?
I do, sir.
Is the SEC a member of the President's Working Group?
We are, sir.
And do you believe that, did you support that recommendation of the President's Working Group?
I did.
And do you think that Congress has been inactive on this topic?
As best I know, Congress is engaged with the administration throughout the 2 years. So
You would call that active? Yeah. We're looking for that framework, and you support us drafting a regulatory framework for payment stablecoins.
If I could say, when stablecoins, I think that it's important to ensure that there's safety and soundness there, and that if this committee and Congress were to address this through legislation, to ensure that we don't undermine our $100 trillion capital markets, that we don't inadvertently somehow undermine what money market funds operate in this country, or how other parts of the financial markets. Lastly, that we don't undermine both the CFTC's and SEC's authorities to go after fraud and manipulation, because right now these stable coins are being used in the crypto ecosystem, and I think you really do want that cop in the beat, the SEC on the beat in the crypto ecosystem.
Well, I'm glad to hear you say that you support a regulatory framework, and I think those issues you raise have to be taken into account by the President's Working Group, and I think they have. I mean, I think those are addressed in their reports, and I think that's certainly the focus of hearings, and so I'm glad to hear, and I don't think I'm putting words in your mouth, that you do support Congress attempting to create a regulatory framework for payment stablecoins. Is that fair?
I think with the guardrails of not undermining the $100 trillion capital markets, and remember,
No, I got your checklist. We've got that.
I was just going to also, in the recent events in the markets, one of those stable coins actually had over $3 billion at Silicon Valley Bank.
Understand?
So
terrible decision by them.
So
terrible decision by Silicon Valley Bank. We've already had a hearing on that subject, and I know we'll have some more follow-up on it. Let me ask you about the Consolidated audit trail, something that's plagued my existence for the 8 years I've served in Congress. I've already on record not a supporter of the CAT. Has the SEC issued the final rule on the Consolidated audit trail to the best of your knowledge?
the rules are in place. We're still working on parts related to filings in front of us on funding and some amendments with regard to data security.
Would it surprise you that some people in the brokerage community weren't aware that the CAT is actually already being collected as of December 31st? And are you aware that that data is already being collected?
We're actually, as a regulatory agency, aware that it's being collected, transaction data is being collected, and we benefit from that.
Are you concerned about the encryption of that data, that it's inadequate?
I think as a government agency, we should always be focused on data security, and data encryption is one of the pieces of data security.
I'd like for you to respond to me about if you would, respond in writing about the encryption of that and the protection of anything that would be considered personally identifiable information. Let me turn to a different subject, which is the Treasury market. We have a time right now where the Fed is shrinking its balance sheet and where there's an unprecedented amount of Treasury issue because of the avalanche in spending by the Biden administration. Is the SEC a member of the Interagency Working Group on the Treasury market?
Yes, we are, sir.
And yet you have this proposal, as I read it, that would say that people who are buyers of Treasuries could somehow be swept up and become dealers. Why are you proposing that someone who might be a dealer, an investor in Treasury suddenly become a dealer?
It's really under a law Congress passed in the 1980s after a lot of problems in the Treasury markets, but it's focused on parties that are facilitating buying and selling treasuries and making markets in those treasuries in the markets to get them registered, whether they be high-frequency traders or others that are active in the market.
My time's expired. We'll have to continue this conversation offline. Thank you, Mr. Chairman.
The gentlewoman from New York, Mrs. Velasquez, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Gensler, I, like many people, was outraged by the reports that Silicon Valley and Signature Bank executives were receiving significant bonuses while simultaneously running their banks into the ground. Since becoming chair, can you briefly explain the actions you have taken to address executive compensation issues amongst publicly traded institutions?
I thank you. I'm proud that we were able to complete 2 mandates from Congress in this area. One was with regard to executive compensation needs to be clawed back if it's built upon erroneous financials. And number 2, disclosure about pay-for performance. And then also we took up something around how insiders sell their stock and how they do this under the plans. And this was one of the proposals that we adopted last December as well. Unanimously, it's about insiders selling their stock.
So in line of that response, as you know, Section 956 of Dodd-Frank requires the SEC and several other agencies to write rules to ban incentive-based executive compensation that encourages inappropriate risk-taking. It has been almost 12 years, since we passed Dodd-Frank, and the SEC, like other required agencies, still hasn't finalized this rule. So what step has the SEC taken under your leadership to finalize this important rule?
We have initiated discussions with the other 5 agencies. We have to work with the bank regulators and the Federal Home Loan, FHFA, to do this. But I'm committed to get this done. We have to do it in coordination with the bank regulators.
When? Another 12 years?
No, you're absolutely right. I came into this job 2 years ago. There were 8 mandates from Congress that had not yet been done out of Dodd-Frank. We've completed a number of those, and I'm committed to complete this along with the 4 bank rate agencies and the 1 FHFA.
Sir, it has been publicly reported that Greg Becker, the disgraced CEO of Silicon Valley Bank, sold 3.5 million of Silicon stock less than 2 weeks before the bank's collapse, raising questions about whether he ran afoul of insider trading laws. What actions has the SEC taken to investigate stock trading by bank executives leading up to the bank's collapse?
If I could step away from any one circumstance and say it's against the law to trade on material non-public information. That's whether you're at a company or whether you're in just a private citizen, that's against the law, and we take that very seriously.
So what action has the SEC taken under your leadership to address insider trading generally?
Well, over the course of the last 2 years, we've brought over 1,500 law enforcement actions, and we could get back to you and give you a list of those related to insider trading, but unfortunately more than one.
Mr. Gensler, The S-2155 legislation that passed in 2018 contained legislation I authored that extended the 19